she's here. Okay. Ms. Hopkins, welcome again, and are you ready to proceed?
Members of the panel, thank you, Member Yaqub. We now move to the final case of the tribunal, dealing with contemporary state capture within the arms industry, and with a focus on the case of Denel, South Africa's state-owned entity that operates within the arms world. The broad allegation arising from the submissions received by the tribunal from the public is that over the last 5 years, important decisions at Denel were being directed by people connected to an external private network, rather than by the statutory and constitutional mandate of Denel, which is to act in the benefit of all South Africans. We will drill down into specific allegations that members of the executive were involved in allowing and facilitating this to happen, in particular the replacement of the whole board of Denel by Minister Lynn Brown. The fact that the board of Denel became compromised with its links to the Gupta network, that the board removed all senior executives of Denel, and that Denel pursued a joint venture with DR Laser Asia, a Gupta-aligned company that would ultimately benefit Gupta business interests and third-party business interests rather than Denel and the people of South Africa. And lastly, that Denel used the timing of cabinet reshuffles and the interim ministers in the Treasury to pursue its aims and to circumvent the important oversight mechanisms for state-owned enterprises. The tribunal will not be making factual determinations on the truth of these allegations. Rather, we will be asking for a finding that a prima facie case exists that warrants further investigation and further action. While we have heard evidence over the last few days and submissions on illegal conduct within the arms industry during the apartheid era and in the early years of democracy, the section on state capture is different in a certain respect. The conduct arising in these instances must be measured very carefully against the constitutional and statutory framework and jurisprudence relating to state-owned enterprises in the country, in addition to any criminal standards that we may well apply. And while there may have been difficulties holding actors to account in these previous cases, the opportunity is still with us in respect of the case on state capture, as these were state-owned enterprises, ministers acting in the course of their constitutional duties. With that in mind, as evidence leaders, we will be making submissions on the nature of such action that we recommend should be taken against the primary actors. As an overview of the case, we will begin looking at the role of state-owned companies in the economy and in furthering government policy, as well as the role of the private sector in state capture. We will then provide a broad overview of state capture, how it manifests today, how it may have manifested in the past, who are the political elite at present who benefit from state capture, and what is the modus operandi we have seen of the Gupta network, and what lessons we can learn. We will then turn to the factual case study of Denel and VR Laser and look at the role of the executive and the conduct of the board of Denel in facilitating state capture and pursuing a joint venture that was clearly not in the interests of Denel or South Africa. And lastly, we will conduct an analysis of the oversight mechanisms that worked in that instance and those that didn't, and provide our recommendations for action. We have 3 witnesses. The first 2 will be speaking today, and they will be providing expert opinion evidence. Mr. Khaya Sithole will be speaking first. He will be talking to corruption as an economic crime, the forms of corruption that exist in the private sector and the public sector, and the role players that we see in the issues of corruption and state capture. Later today, Professor Ivor Chitkin will be talking about the Betrayal of Promise report prepared by a number of organizations in South Africa, including PARI. He will be talking primarily about what state capture means and how we see it playing out today. Tomorrow, we will be having evidence from Ben Turon from OUTA. He will be talking and presenting the evidence which provides the factual and prima facie base for the allegations that Denel was involved in a deal that sought to benefit third parties and not the South African public. With that overview in mind, we would like to introduce our first witness, Mr.
Before you proceed, if I may, Chair, can you help this People's Tribunal by giving us a definition of state capture?
Thank you, Member Pillay. That is something that the two witnesses today will be dealing with, so I shan't preempt that just yet. But it will be something that we will deal with in further submissions later on, where we try and capture that for the tribunals, to assist the tribunal. Mr. Sithole, you can take the stand. Mr. Sithole, thank you for joining us today and for giving your time to this tribunal. You will be talking today about corruption and economic crime, how that links to state capture, and the impact on state-owned enterprises. Can you tell us a bit about your qualifications and your interest and experience in this area?
Thank you very much. My name is Khaya Sithole, and by training, I am a chartered accountant, and I have worked in the private sector, and I've also worked in academia, and these days I'm sort of more involved in the writing and the media space. So my interest in this particular conversation is that having worked in the private sector, and specifically in the field of finance and accounting, I then moved into the academia path, and it was in that process of being an academic and teaching individuals about this utopian system that exists where our transactions happen the way they should, and to then realize that the reality was far removed from this utopia that I used to speak about, where my interest in trying to unpack the reality of what happens in particular in the private sector and how this leads into corrupt activities that then have a much wider impact on society. That's where that interest developed. So over the past couple of years, I've spent a lot of time really studying various iterations of what you might call corruption within the private sector, and essentially the question of why, firstly, it is so misunderstood and is so underreported, and why it continues to thrive in spite of the various legislative mechanisms that exist to combat all forms of corruption. So that has really been the basis of my research, if you want to call it that, and my writings in the public space on matters of private sector and its link to corruption.
Thank you. One of the questions that the panel raised earlier in the tribunal is how the concept of corruption links to the concept of state capture and economic crime, which, as you know, is one of the terms of reference of this tribunal. Can you talk to those concepts and how the burden of corruption operates and plays out between the public and private sector?
Okay. So primarily, I think the essence of corruption itself could simply be crystallized as various forms of fraudulent activities and fraudulent endeavors whose impact is that either people receive a particular financial gain, or more importantly, other people are worse off because of other people's particular activities. So the essence of corruption is itself very widespread. There are different activities that you could identify. And I think in most cases, it is easy to identify the explicit forms of corruption. So when somebody steals money from a place where they shouldn't steal money, then that's an explicit exhibit of corruption as defined. But also, quite importantly, for me, it is the passive forms of corruption that are a bit more problematic, because in their passive nature, we tend to struggle, firstly, to quantify their impact on the affected entities, and also their impact on broader society. So, for example, if somebody says to you that they've decided to shift their headquarters or their operations to a tax haven, there is nothing illegal about that, because they've simply identified a place somewhere in the world where they can pay less taxes than they otherwise would be forced to pay in South Africa. So that is a passive form, because what it really does is that it deprives the state of South Africa of the tax revenues that it otherwise would be entitled to. So if you then look at the longer term impact of such activities, you then have to ask the question of why we don't crystallize that as a form of corruption, if you're simply going to say that the overall impact, the state being deprived of taxes, is essentially the same impact that you'd get if somebody directly stole the money. So I think when you sort of try to then crystallize the two types of corruptions, and in that binary nature being explicit and sort of less explicit, then you find that corruption is a far more pervasive and fundamental concept. And I think in the South African narrative, we obviously find it much easier to look at the explicit exhibits of it. But for me, I'm more curious in finding out about the less latent exhibits of corruption and how we can tackle them. So I think that's where the essence of corruption starts in. So of course, corruption, as defined, is a crime in its essence, and it is an economic crime. And unfortunately, in the South African context, and some say even in the global context, the idea of firstly understanding economic crimes is very limited. And when our judicial systems have a limited understanding of economic crimes, it means that the enforcement and the way to punish those crimes is also severely limited in itself. And what you'll also find, and I'll elaborate on this later, is that when it comes to economic crimes, what makes them quite unique is that there is a very well-cultivated economic system that either hides the crimes from the public eye, or when they're discovered, finds enough loopholes within the existing legislation to sort of simply say, well, it is actually a gray area, so therefore it becomes very difficult to prosecute. The one example that I always look at is we have the Competition Commission, and the Competition Commission occasionally discovers incidences of corruption in the private sector, whether it's through anti-competitive behavior or through cartel conduct. But because the players, the role players, are not going to volunteer the information, it then ends up having to enter into plea bargains with parts of the system. So some of the people that committed the crime are then the ones that say, look, we are going to confess our role and expose everybody else. And those people tend to get immediate immunity from being prosecuted for their crimes. So when you look at that particular weakness in the system, you could find a very perverse situation where the biggest role player in some form of cartel behavior or anti-competitive conduct is the one that volunteers the information. And of course, they, having been the biggest beneficiaries, should be attracting the biggest penalty. But of course, because they've now volunteered the information, they get this immunity, which then deprives the state of the funds that they otherwise would have levied as a penalty. So that essence of economic crime is something that is quite important for us to unpack. And what I've identified is that in the South African context, you will find that when we talk about the essence of state capture, it is really a question, at least I focus on the question of the economic impact of this phenomenon of state capture. So if one had to narrow down the essence of state capture as a state that exists but doesn't have the capacity to do what it needs to do, that state then starts outsourcing its core functions to private sector players. And it is in that process of outsourcing its core functions to private sector players where the loopholes exist. So I think the most explicit example we've seen, in South Africa is probably the Cash Pay Master Services deal with the South African Social Security Agency, in that the security agency itself doesn't have the capacity to roll out the social grants as it should. So what it then does is that it goes out into the private sector, and then it says to the private sector, we need your assistance in rolling out this particular activity. But in that process of soliciting assistance from the private sector then identifies that actually, if we are going to ensure that we remain permanently engaged in this particular contract, we should pass over as little information as we can to the state. So you withhold as much of the intellectual property as you can, so that even at the end of the contract, the state agency is not in a position to do its own job, and you simply then keep rolling over the contract. So that was how we saw it in the Cash Paymaster Services scandal. And what that really means is that essentially that part of the state, that particular state agency, becomes really subject to the whims of the private sector. It becomes captured by the private sector in the sense that they can't stop doing what they need to do, but they don't have the capacity to do so. So that's really how parts of the state become captured by private sector role players. And that's, for me, would be how you would link the essence of corruption, economic crimes, and state capture.
Thank you. You have covered this broadly in what you discussed, but could you mention the forms of corruption that are most prevalent in the private sector?
Okay, so within the private sector, the forms of corruption are very widespread. And in some instances, we haven't even identified some of them. But from the readings that I've done, and I obviously haven't gone through all the literature that exists, perhaps the most important ones would be, and I'm going to limit it just to 5. Money laundering would be one. The exploitation of tax laws would be the next. Behavior of cartels and anti-competitive conduct will be the 3rd one. Financial statement fraud will be the 4th one. And the last one would be the abuse of legal loopholes. So I'm going to sort of briefly elaborate on each one of them. So when we talk about money laundering, we're really looking at a very unique crime. And this crime tends to have very interesting features in that you are trying to remove funds from one agency or from one entity to another without actually receiving the requisite benefit. So the most explicit example that I can use of money laundering would be perhaps in the McKinsey and Eskom and Trillion transaction that some of us have heard about. So what you are seeing in that particular transaction is that you've got 3 role players. You've got the state agency, which is Eskom, which has identified that it doesn't have the capacity to do a particular activity. So what it then does is that it identifies a private sector role player which has the capacity to do that. But in the process of identifying the private sector role player, somebody then discovers or decides that actually we need to be able to extract more out of Eskom than the benefit that Eskom is going to receive. So if the value of the contract is supposed to be R1 billion, we can then instruct this private sector role player to add somebody else to that particular transaction. Now, whether that person gets called, a BEE partner or a development partner, it means that Eskom is now paying 2 separate agencies. And the key issue here is that if you are extracting more out of Eskom, for example, than the benefit that Eskom is receiving, you are essentially taking money away from Eskom without providing Eskom that benefit, and then suddenly that money starts belonging to somebody else. So essentially, you found a very sophisticated and, unfortunately, legally acceptable way of moving cash from one entity to another without essentially breaking a rule. But of course, the fundamental reason why that is possible is that nobody can turn around and say, actually, the benefit that we received as Eskom or as another state entity is not commensurate with the amount of money that we paid. So when you have that particular limitation, it means that laundering of cash can actually be facilitated in that way. And that's just one particular example. Some examples are far more explicit, where people simply inflate a particular invoice, and of course they've spoken to the people that are part of the transaction, and they know that once it has been transferred from one account to the other, it becomes property of the recipient and the beneficiary, and that recipient or the beneficiary can then do with that amount of money as they please. And whether they pay kickbacks or bribes is how you see the money laundering landscape manifesting itself in South Africa. So that's obviously just very limited examples. The second one, which really pains me the most, is essentially the exploitation of tax laws. Now, the exploitation of tax laws happens in the context of us having to acknowledge that we are part of a global ecosystem. And in the global ecosystem, every jurisdiction and every country is free to set its own tax laws. Now, some countries essentially go around shopping for for entities. So how countries go shopping for entities is that they would come, for example, to a country like South Africa and identify a company, let's say like MTN, which is a good example. So MTN, by and large, is a South African entity. It was created here, it was cultivated here. This is their primary headquarters. So a country like Mauritius can then say to MTN, look, you are based in South Africa, the tax rate in South Africa is 28%. However, if you were able to shift your headquarters to Mauritius, we would either give you a favorable tax rate or don't charge you any taxes for a particular period. Now, what that does is that it creates an incentive for a company like MTN, I'm just using them as an example, to then say, let us shift our headquarters, for example, to a jurisdiction like Mauritius. Because once our headquarters are in Mauritius, we are then in a position to report our profits and our revenues within that particular jurisdiction. And in that jurisdiction, we are then able to pay a much lower level of tax. Now, that is essentially not illegal. There is nothing wrong in law with MTN deciding that they want their headquarters to be in Mauritius. But the reality is that they've simply exploited or arbitraged the tax gap that exists between the two countries so that they end up with a lower tax burden than they otherwise would have. So that's just one particular example. I think the most prominent one that we've seen internationally is with the company that manufactures iPhones, which is Apple, which essentially is based in the United States, but went shopping in Europe for a country that would essentially not charge it any taxes, and they found that environment within Ireland. So the Irish government was happy not to charge Apple any taxes, because what Apple did is that it then said, we're going to set up offices here. And when we set up offices here, we're going to employ Irish people. So because you want people to be employed, allow us to do so. And that is what happened. And the European Union then looked at this transaction and identified it as an exhibit of tax law exploitation. Apple didn't do anything wrong, but after much deliberation, they were made aware that essentially what they had committed is a form of an economic crime, because they deprived the United States fiscus, for example, of taxes that otherwise would have accrued to the United States by then moving on to Ireland. And then the government of Ireland itself was also, wrapped over the knuckles about this to say, when you do these types of activities, you are actually depriving other countries of tax revenues that are due to them. So it is behavior that is not illegal, but it is frowned upon. But if I am representing a company like that, and I can see that this is a loophole that I can exploit, then of course I will do so. So that is another form of economic crime that we see being prevalent in the private sector. The third one would be cartel conduct. And cartel conduct is probably more explicitly exhibited in the South African context. Now, cartel conduct tends to thrive when there are a limited number of role players within a particular sector or a particular industry. So we refer to those as highly concentrated industries. So if you have a few role players that are part of a particular sector, it means that the ability to share information between those role players is elevated. And if they're in a position to share information regarding their pricing structure, regarding their bidding strategies, it means that they're in a position to collude and essentially offer inflated prices to people that want to engage with them. So if you look at how the construction cartel operated back leading up to 2010, it's that the government in South Africa will say, we want you to build a particular infrastructure project, and legally we are required to solicit at least 3 quotations. So the understanding is that when we put that out in the media, we're going to get 3 independent quotations, and of course we are going to choose the best offer of those 3. But what then ended up happening is that these particular companies would then themselves sit around a room and look at what each was offering as a price. And then they'd be able to say, if you, company A, offer that particular price to the government, it means they're going to go for your bid. And unfortunately, if your bid is low, it means that they will expect us to offer similarly low bids in the next project. So what we're going to do is that we're all going to agree on essentially a floor to say we are going to inflate prices up to this level, and when we inflate prices up to this level and we all present the inflated prices, it means the government will not be aware that they actually can receive this product or this service for a lower price. And that's essentially how cartel conduct really happens in the private sector. So of course, if there were 10,000 role players in that particular industry, it would be impossible for them to all sit around the room and essentially fix the prices. So the culprits of cartel behavior and anti-competitive conduct tend to be the highly concentrated industries within the South African context. And unfortunately, for historical reasons, we have a lot of those. So if you look at the construction sector, it's one particular example of that. The banking sector also has very few role players, so you get the impression that they're also in a position to achieve such particular outcomes. So for me, that weakness that we have in our economic system, where there's high concentration within particular sectors, leaves us exposed to cartel behavior. And the one agency that we have, of course, is the Competition Commission. But of course, the Competition Commission has to then do a lot of research to even identify whether exhibits of such cartel conduct exist. And of course, the people that engage in this are not going to go and publish this information. So it either requires us to be at the mercy of whistleblowers, or in some instances, the ability of the Competition Commission to look at a particular industry and simply say the pricing mechanism or the pricing ecosystem there doesn't make sense, which then initiates an investigation, and in some cases, then they do succeed. The fourth one that I think is a form of corruption that is very key in the private sector is a form of financial statements fraud. So I think most of you would have heard of an entity called Steinhoff in recent times. So Steinhoff is being accused of having committed something that is interestingly referred to as accounting irregularities. Now, accounting irregularities is the term that the spin doctors of Steinhoff came up with to explain corruption. So what happens with financial statements fraud is that in the way that we engage with our private enterprises is that for most of us, our most accessible information relating to a private entity is the publication of its financial statements. So if you are the type of person that wants to invest in a particular entity, the most robust information that you're going to get is in those published financial statements. So those published financial statements form the basis for you deciding that I'm going to invest in this company or I'm not going to invest in this company. So if this particular entity then says to you, look, we've got assets worth 100 million rand, you start thinking, well, if they have assets worth 100 million rand, I'm happy to put my money in there because they will use those assets worth 100 million rand in order to generate a return or a profit, and I will benefit. So what then happens is that if it turns out that that number of 100 million rand is fabricated or false, it means that the basis for your investment decision making has been compromised. And in that particular instance, you then have to look at the economic loss that you would suffer as an investor. But also, the secondary problem relating to financial statements fraud is the nature of the incentives that exist within the private sector. So in the private sector, the one common way in which the executives and the people that lead the business are rewarded is linked to what they can produce in the terms of financial statements. So if your set of financial statements in 1 year reflect that you made a particular profit, and then in the second year you've improved on that profit, you are regarded as having done a good job. So therefore you get paid a bonus on that particular basis. So of course, in instances where people are in a position to then link their own bonus possibility to the question of how good the financial statements look, then there's always going to be an implicit incentive for them to make the picture look much better than what it is. So that's essentially what really encourages financial statements fraud. So the one mechanism that we have in order to try and deter that is obviously the auditors, who are supposed to remain sufficiently independent to sort of ensure that such fraud doesn't occur. Unfortunately, in the case of Steinhoff, it turns out that the auditors were not able to do that. And the reality is that the main man who seems to be implicated here, the previous CEO, is a person whose remuneration, whose rewards over the past 10 to 15 years were based on what was published in the financial statements. And it now turns out that what was published there was essentially fabricated, But unfortunately, he's already reaped the financial benefit in the form of rewards and bonuses that is collected over time. So in that particular instance, it then leaves other people worse off when they then eventually realize that there was this fraud. And that is one form of corruption that is very, very prevalent across the world, which is why the role of auditors has always been so fundamentally important in order to try and counter that. The last one that I'd like to sort of talk about is essentially the abuse of legal loopholes. And I think the one industry that is more creative than most is obviously the legal profession. So what tends to happen with legal industry is that they are in a unique position to either draft particular contracts that are legally acceptable, but perhaps morally and ethically a bit questionable. So for one example, if a person is going to enter into some form of tax law exploitation, the first thing that they're likely to do is to call in the lawyers and simply say to them, this is what we are planning on doing, and this is the economic outcome that we're trying to achieve. How far can we go without being seen as having committed a crime? So the role of the legal professionals in identifying the legal loopholes and then advising clients on how to capitalize on those legal loopholes is unfortunately a big player in this particular ecosystem, which is why when even these issues are identified, it is very difficult to then take people to task and even imprison some of them, because they can always give you a very sound legal basis for what they did. So that legal basis is, of course, not to be confused with the ethics and the morality of what they did. So in my view, those are essentially the 5 main forms of corruption that exist in the private sector. There are a lot more, but I think if we try to unpack all of them, we might be here until we get a new president in the country.
Thank you. Can you tell us about the active and passive impacts of economic crime on ordinary South Africans or
Okay.
particular groups?
Yeah. So the impact of economic crime is actually very, very difficult to quantify. And the reason why impact is very difficult to quantify is that, firstly, we haven't even learned to understand the nature of the crimes that get committed within the private sector space. And more importantly, even if we do identify them, there is this impact of a multiplier effect. So, for example, what tends to happen, especially in the South African context, is that people tend to say that there is a lot more coverage and a lot more focus on public sector corruption than there is on private sector corruption. Now, what informs those narratives is that essentially, if you look at public sector corruption happens within the context of us understanding that the primary role players, the primary stakeholders in a public sector entities are the citizens and the taxpayers. So if you look at Eskom or SAA, for example, the people that get most affected by what Eskom does will be the general citizens. And when Eskom is in trouble, it is the taxpayers that have to bail it out. So because the stakeholders that are affected within that particular context are essentially the entire country, it is natural that there'll be greater outcry when public sector corruption is being spoken about. On the other side, when you talk about private sector corruption, the historic understanding has always been that the primary affected stakeholders within a private sector conversation are the investors and the shareholders. So, for example, if I speak of a private sector company today that somebody in this room has never heard of, they might not think that the corruption in that particular company affects them because they are not an investor and they're not a shareholder in that particular company. However, that binary understanding of the impact of private sector corruption is fundamentally flawed. Because if you look at an example of Steinhoff, for example, which is obviously quite in the news right now, of course Steinhoff has its shareholders and its investors, and they are the people that are in a position to quantify their losses easily. What Steinhoff also has is that it is a public interest company. And by it being a public interest company, it employs individuals. So across the globe, it employs 130,000 individuals. So these 180,000 people that stand to lose a job if the impact of the fraud and the corruption that has been uncovered results in the closure of the company. Steinhoff is a taxpayer in no less than 33 different countries. So if Steinhoff goes under, it means that 33 different countries are now going to be deprived of the tax revenues that they're currently extracting from Steinhoff. When 130,000 people stand to lose their jobs, you then have to look at the economic impact of those job losses. Because in most instances, one job has got multiple beneficiaries, either being your siblings or your children. So we have to be able to understand that this binary analysis that says that the only people that are affected by private sector corruption are just the investors and the shareholders is misguided, because the impact is much wider than that. There will be the direct impact on, let's say, the employees. There's also what you might call the indirect impact on the rest of us. Because, for example, if an entity of that nature and size is no longer in a position to pay taxes in a country like South Africa, we then gravitate towards, having to look for alternative ways of raising taxes. And that is the type of impact that a lot of us have never quantified. There is also this important element where we have to look at the role of institutions like pension funds and how they also get affected when private sector corruption is committed. So again, in the Steinhoff example, we've got a very useful exhibit there, where the Public Investment Corporation, which invests the pensions of public sector workers, is a major shareholder in an entity like Steinhoff. So for them, when Steinhoff then goes under, they tend to lose billions of rands. And when they lose billions of rands, it means that in 4 or 5 years' time, when that teacher or a policeman has to then retire from active service, the percentage of the pension that they're entitled to has been impacted by this fraud and corruption that happened in the private sector. So there are the short-term, the very visible impacts, primarily on the people who can quantify their losses immediately. But there are also the greater long-term impacts on people who might not even be aware that this corruption that is happening in the private sector will also have an impact on them. So for me, that is really the type of impact that we should be looking at.
Can you talk about the role of whistleblows and confidentiality in private sector corruption?
Yeah. So one of the key limitations in the private sector space that really limits the ability of corruption to be defeated is this tension that exists between the question of whether I can be a whistleblower and an employee at the same time. Now, to crystallize that, I'm going to use the example of the largest and the biggest corporate scandal in the United States, which was the case of Enron. Now, Enron was a big company. It fell apart because it was doing fraudulent financial reporting, and unfortunately, its auditors were sort of also on par with those particular activities. Now, there was a human being called Sharon Watkins who used to, ironically, work for an auditing firm firstly, and then move to the company that was being audited by this auditing firm. And at some point in time, she started identifying what we now call accounting irregularities within Enron. Now, the problem here is that the people that were perpetuating these irregularities were her superiors. So the first question would be to say, can she then go beyond the confidentiality clause that exists in an employment contract and then go and inform the authorities that actually something is going wrong here? In her case, it was very difficult because she wrote a memo to her superiors and said to them, I believe that what is going on here is incorrect. She identified the irregularities and she passed that memo to her superiors. And then nothing happened until 5 years later when the company collapsed. So 5 years later when the company collapsed, she then emerged and said, actually, I picked this up 5 years ago, but I couldn't talk about it because I was bound by my employment contract. But the impact of her silence is that one of the biggest energy companies that had ever existed then went under. Jobs were lost, and a lot of people simply, were badly affected. So in that particular instance, I'm also reminded of the recent case that we have in South Africa with the KPMG employee who identified that the wedding expenses were not a business expense. But of course, that person could only report that to their superior. And then their superior said, never mind that. That was the end of the road for them. So you have this particular tension that exists in this context of the private sector, where the very first thing that you get given when you start is an employment contract that simply says, we've got a confidentiality clause for one reason or the other. So when you then identify that fraud and corruption is being committed, are you in a position to then come out and talk about it? Now, a lot of entities will then say, we do have whistleblowing mechanisms, but a lot of people don't have faith in those whistleblowing mechanisms. So the evidence that has been collected primarily by PwC indicates that people tend to be very skeptical about those whistleblowing mechanisms, especially if they are internal. Because let's face it, if there is one boss who has committed a particular crime and you are the employee that had sight of that, either because you report to him or because you're the one that had to process the journal entry, once there has been some form of whistleblowing, it's not going to take a lot of effort for your boss to know that it was you. So people are aware of those particular limitations. So that then means that the ability to tackle this corruption is limited by just that sense of skepticism. So I think until we find a way to be able to enable whistleblowing to happen in the context where people identify economic crimes being committed, and to then ensure that those people are not victimized, we're going to have a particular problem. So in the Enron case, Sharon Watkins could never secure a job after she did the whistleblowing. And the problem is not that people are against her as an individual, but the next employer that looks at her CV and remembers that she was a whistleblower at a previous employer is going to start thinking that this individual does not respect confidentiality. If this individual does not respect confidentiality, I'm unlikely to trust them with sensitive company information that either give us a competitive advantage or makes us better than everybody else. So it's not always because they are themselves guilty of a crime. It's simply because they start thinking beyond that this person might one day decide to do the same thing to us. So those people tend to struggle to find jobs. In the South African context, we've seen it happening over the past couple of months, where the whistleblowers from a company called Trillion are essentially also unable to secure a job because people have those reservations about them. So I think it is an ongoing problem where individuals who are really in a position to say this is a problem are reluctant to do so because of these particular limitations. What those individuals tend to do generally is that they either leave those firms and sign this oath of silence never to talk about it ever again. But when they leave, it means that that corruption keeps festering. And until somebody new comes in and says, actually, I'm not going to stand for this, and takes a stand against it, then you find that, unfortunately, the corruption in the private sector continues to thrive.
You've spoken a bit about the difficulties in drawing the lines between unlawful conduct and unethical conduct in the sphere of economic crime. Is the answer, in your opinion, to make more laws, to make more economic crimes proper, or should we be thinking of new mechanisms in order to prevent and punish this kind of conduct? And if the answer is to make more laws, then that's a job that falls to Parliament. Do you think there's political willingness to expand the scope of the laws that deal with economic crimes? And what is the role of corporate South Africa in lobbying to prevent that?
My thinking is that you will find that if you read the existing laws and regulations in a very utopian stance, you will find that there is enough opportunities, there are enough rules and guidance for redress and for dealing with these particular issues. So I don't think we've got a massive vacuum in the legal framework. It's really the question of, firstly, the interpretation and the understanding of those particular laws and how they can be applied to crimes that can be rather sophisticated in nature. So, for example, you could have a law like the Prevention and Combating of Corrupt Activities Act, which was issued in 2004, that simply says, look, when a corrupt activity is identified, this is what you need to do. But then again, if I present a particular transaction to you and I'll ask you, is this a corrupt transaction? It becomes a bit of a problem. So the one example that I will give to you is that in a lot of the state capture cases that we hear about, the issue seems to be, and you mentioned this earlier on when you talk about the boards being the ones, the issue seems to be, if a transaction has been conducted and has been executed, every entity is going to have guidelines on who is the authority to sign off on that transaction and how that authority is delegated. So for example, if a transaction, if the guidelines say every transaction above 500 million rand must be signed off by the chief financial officer and must be signed off by the board, you will see that the evidence will indicate to you that the chief financial officer did sign off the transaction and the board did sign off the transaction. So the fact that we can all see that that transaction is very suspicious in nature then might fail the legal test, because somebody will say, okay, if you are saying that this was evidence of corrupt activity, was the approval received by the people that should have given the approval? And in the case where the answer is yes, then the question becomes, well, what should we do then? Because we don't want to be the ones that then dictate to that particular entity that, oh, by the way, this is how you must conduct your operation. So you find that in most cases, and I think probably ESCOM is one particular example, where you can see that the executives that were implicated are the people that had the legal authority to enter into such transaction. So if I'm going to engage in a business transaction with an entity of that nature, and I get given the assurance that all the internal approvals that should have been received have been received, can you then exonerate me from being party to this corruption? Because I'm going to say to you, as far as I'm concerned, I did all the things that I needed to do, and this is what you find in the McKinsey conversation, where McKinsey is saying, ESCOM told us that they had all the approvals that they needed, so we can't be party to the crime because we're not aware. So in some cases, people are happy to plead willful ignorance, and then you then find that the law enforcement agencies then struggle to deal with that particular conundrum, because you're then saying, well, actually, as far as they say they knew, they did all the things that they were supposed to do. So I think it is in the ability to then be able to look beyond just the veneer of a contract and say, actually, the longer term impact of this particular decision should have been understood. Now then, who do you prosecute in that particular instance? Do you prosecute the people that rightly had the authority and delegated it, knowing very well that that transaction should not be conducted? Or do you then target the beneficiary of that form of corruption? We will see in the next couple of months, I think some of you are probably following the case, relating to the passenger rail agency. So what the passenger rail agency did is that they wanted to essentially procure some locomotives. So they got a private sector provider to say, I'm going to submit a tender. So when that private sector provider submitted the tender, that tender won. It won the bid. Everybody knows it should have never won the bid, because firstly, the company was fictitious, it didn't have the tax clearance, so it failed all the hurdles. But the people that had the authority to sign up on the transaction were willing to bypass all of that and simply say, we are going to give you the contract. Now, as a consequence of that contract, this private sector provider was then paid an amount of, I think, 2.3 billion rand. And they received the amount of money, and then they said, well, we've won the bid, we've been paid as we should have been paid, so the money is ours to spend. What then turned out later on is that the board of this entity, a newly constituted board, looked at this particular transaction and said, this thing should have never been approved. So we want it to be actually be overturned by a court of law. And as part of overturning it, we want this private sector provider to pay us back the money. And this private sector provider turns around and says, no, we submitted a bid, we were told by the people that had the authority to tell us that we had won the bid, and then the amount of money was paid. It was not our duty, it was not our responsibility to look beyond that and find out whether you guys had done your processes properly. So when you look at those particular limitations, you then are stuck with this particular contract, and the law is very clear. It's a form of corruption, but the private sector player is going to plead willful ignorance and say, unfortunately, we did what we were supposed to do, and therefore we benefited correctly. You can't ask us to pay back anything. So you'll find that in the South African context, it is probably not the absence of laws that is the problem, but either the inability to implement them properly, or perhaps there is a lag between the sophistication of the crimes and the rules that currently exist. Now, do you want your legislatures to keep updating the laws as they go along after identifying particular crimes? It's always going to be a retrospective exercise, because it is only when you've identified a new form of corruption or a new form of a crime that is probably not covered by the existing rules, which is then when you initiate the parliamentary process of saying, let us write the laws in order to combat this. So unfortunately, because legislation always lags behind the crimes themselves, you're always going to find this particular gap. And I think also the question of whether our parliamentarians are sufficiently, empowered to understand these sophisticated crimes and sort of write into law the rules that would ensure that these things happen is something that is worth debating. So the role of business lobbyists in obviously then ensuring that the rules that get cast in stone are not, as robust as they can be is something that we cannot deny. The one example we've seen recently is the multi-choice conversation. So multi-choice is obviously an entity that is trying to preserve its existing competitive advantage. So what they will do is that they'll be able to approach functionaries within the state and say, look, as far as we are concerned, if you change this particular policy, there will be adverse impact on society or some other structure. And lobbyists have a very good ability to sort of sell their story. So it doesn't have to be really a fact. But what they are able to do is to say, look, we think the current regulations are good enough. All you have to do is learn to implement them properly. So that is what lobbyists tend to do. And if lobbyists are sufficiently powerful enough to then sway the views and the opinions of lawmakers, you then end up crafting laws that are fundamentally compromised in nature. And when laws are compromised, you then find that after we've written the laws and we try to implement them, you then find that there's existing gaps. But in the South African context, we have this great time lag that exists between a process being initiated to say we want to change a law and it being finalized. So until we're in a position to compress that particular conversation, I think the frustration is going to live on.
We started off your submissions today talking about some of the terms that we use to describe some of the conduct. And we've heard a few more throughout your submissions. We use the term accounting irregularities rather than corruption, or anti-competitive behavior, or tax avoidance rather than tax evasion. What role do you think those terms have in preventing this kind of conduct, and what do you think the role of the media is in this regard, to point to the actual conduct and the outcomes?
Yeah. I think the terms that we hear being bandied about, particularly in the private sector, things like accounting irregularities, have the ability to sanitize the issue at hand. So if we are talking about a public entity, the term corruption is unfortunately very easily understood. So you know that an activity was undertaken and the economic impact of it is that that public entity and by extension, the taxpayers and the citizens are worse off. Now, when we talk about something like accounting irregularities, what tends to happen then is that what we are really doing is that we are talking about the initial phase and not the impact. So when I say there's a difference between the initial phase and the impact, if I'm going to say to you that there's been an accounting irregularity, that accounting irregularity is only such a thing because it had the consequence of either producing a set of financial statements that were fraudulent in nature or fabricated. So the consequence of producing fabricated or fraudulent financial statements is that there's going to be an economic loss to somebody, and there's going to be an economic gain in most instances to the people that perpetrated the fraud. So the consequence of an accounting irregularity is essentially corruption as defined. But what tends to happen is that the private sector, when they speak of these particular things, they do not get to the impact issue. They simply say, this is what happened, and then they leave it to us to then interpret what the consequence of that ought to be. So if you look at the Steinhoff conversation, as I said earlier on, if somebody had said, I'm going to go and steal 20 billion rand from the Public Investment Corporation, and that was an explicit action of taking money, then it's easy to say, this is the corruption, and the impact of that is that we've lost 20 billion rand. But in the private sector conversation, it forms part of an interlinked narrative, because you have to be able to say, okay, there was an accounting irregularity. The consequence of that accounting irregularity is that the share price went down. When the share price went down, there was an economic loss to the Public Investment Corporation, and that economic loss is equal to 20 billion rand. So when you talk about the public sector, the gap is much narrower. So you can see that somebody stole the money, so therefore this is the impact of it. But when it comes to the private sector, because you first have to link that private sector to some essentially other entity to say what is the impact of private sector conduct on that ultimate entity. And a lot of people tend to think that there are different things. But for me, it's not the wording that matters, but rather the impact. And the impact for me is always essentially corruption. So I think what we need to be able to understand is that, unfortunately, having been engaging with the media in recent times, you find that even in the media space, that ability to understand those links is not as elevated as we think it should be. So people who report on these particular transactions rely a lot on the information provided by the perpetrators. So it was Steinhoff that came to us and said there's an accounting irregularity. We didn't discover it ourselves. So if we are going to rely sabotage. Okay.
Not yet. Right. Out.
Okay, let's try it again. So, as I was saying, if we are going to rely on the perpetrators providing us the information, it means that the nature of the reporting is going to be primarily influenced by what the perpetrators have decided to disclose. So you saw in the issue around Steinhoff, they're the ones that came out and said it's an accounting irregularity. So if I'm going to report on that and I'm not in a position to firstly understand what that irregularity is and then be able to sort of weave the thread and say this is a form of corruption in itself, it means I might limit my reporting to using the terms that they've come up with themselves. Similarly, last week, you saw an example of MultiChoice coming out and saying that there were missteps or there were mistakes in the lobbying process. And because they're the ones that introduced that narrative, that is the narrative that we end up adopting. And we never actually then say, well, actually, if you are saying that that is what happened, we assume that the ultimate consequence is a form of corruption, because in those mistakes and those missteps, did you achieve an economic gain that you otherwise would not have achieved? Did somebody suffer an economic loss as a result of that particular mistake or lobbying misstep? And if the answer is yes, there was an economic gain on our side and an economic loss on the part of society or another party, then this is corruption as defined. So I think the role of the media itself does require to be interrogated. And it's been frustrating for me, obviously, because I always look at this, I'm like, but no. The only reason they said that is because there was a financial consequence and a financial impact. So you should be able to interrogate them and say, okay, when you did that, who was on the other side of the transaction and how did it impact them? What was the impact on society and what was the impact on the state? And then you'll find that if we're able to expand that narrative, it'll be easy for us to actually say, yeah, in spite of the words that we've used, it's actually another form of corruption, and then we can report on it accordingly.
Thank you. By way of rounding up and summing up, can you provide us with your recommendations in this field, and particularly whether there are different recommendations for state-owned enterprises and private companies in order to protect them from the vulnerability from corruption?
Yeah. Okay. So I think before I sort of come up with the recommendations, I think what is important for us to understand is that there is a very, very complex ecosystem under which private sector corruption can thrive. And this really requires the various enabling or facilitating agents that make it happen. So for one example, if you speak about money laundering in the way that we can sort of identify it is really the process of somebody taking money from one entity to another, but that money is usually shifted through the banking system. So if you look at that banking system, you then have to ask the question, do we have enough skepticism within that banking system for people to ask, if I'm depositing 50 million rand today and I can't explain where it came from, there should be some form of safeguard that says, actually, please explain where this money comes from. So in some instances, some banks are better than others at doing that. But unfortunately, within the global ecosystem, you find that some are less effective at monitoring these cash flows than others. So you have to be able to understand that until we are at least in a position to say that every single transaction beyond a particular value, perhaps in South Africa, needs to be supported by the following documentation, it is very easy for people to be able to even facilitate money laundering. Of course, the tension comes is that you and I could come up with a number to say every transaction above 100,000 rand must be explained under these particular parameters. And of course, a person who wants to engage in money laundering then starts depositing amounts of 99,000 rand. So at what point in time do you expand the scope? And what point in time does it become impractical and simply not able to enforce? So you'll find that there is this difficulty in actually identifying and knowing how to react to these particular forms of crime. And I think also what we need to be able to identify is the role of other enforcement or enabling agents within the system. And I think in particular, the three most important ones tend to be the auditing professionals or the finance professionals, and then the legal professionals and the banking system itself. Because what you really need to be able to find in order to facilitate sophisticated economic crimes is that you need to be able to at least sell your story to those three agencies, because they all communicate something quite important to the public at large. So for example, if I submit a set of financial statements and my name is Steinhoff, and I say to you that these financial statements have been overseen by a credible auditor, you are not in a position to sort of look beyond that and say, I'm rejecting the opinion of the auditors. So we place a lot of faith in these agencies, and the people that commit economic crimes are fully aware that we're placing faith on these agencies. So what they simply do is that all they have to focus on is finding a way of convincing those particular agencies that their activities are correct or above board. So you saw that in the Steinhoff example, where their auditors had been signing off these financial statements for years. And only now did they reach a breaking point to say, actually, we have no idea what is going on here. And then when they then got a new set of auditors to look into this, those auditors said, firstly, what you're trying to say right now is incorrect. But no, it's not just incorrect this year. It has been incorrect for the past 3, for the past 4, for the past 5 years. So suddenly it's unpacking this entire conundrum of transactions that have been overseen by particular auditors, but they didn't think anything was wrong with them, and then they signed them off, and investors use that opinion to say, well, actually, if the auditors say it's good enough, who am I to say otherwise? And you must also acknowledge that the role of auditors is rather complex in this regard, because firstly, if a person is going to commit an element of fraud, the first thing that they're going to think of is, how would other people identify this? And once you've sort of gone through the various permutations that would enable another person to identify that element of fraud, you then structure it in a way that makes it very difficult for them to pick it up. So if a person goes and does an audit for a company like Shoprite, Shoprite does millions of transactions every single day. So it is not possible to audit every single transaction. So if I go in there as an auditor, I will then have a guideline. I will say, I'm going to specifically look at every transaction beyond, let's say, R1 million, okay? Because that is where I think if something can go wrong, obviously it's going to have a huge financial impact. But in that conversation of them deciding that a transaction of R1 million is sufficiently important enough for me to look at, they engage with the management, they engage with the executives and say, we've done our analysis and we believe that everything above R1 million needs to be specifically interrogated. So of course, this management is now aware that a transaction below R1 million is not going to attract the same level of scrutiny. So if they're going to be committing the fraud, then they know that you should not breach that particular ceiling because you're already inviting the scrutiny from the auditors. So it is a consequence of that symbiosis where people are in a position to firstly understand what a person would look at if they were looking at fraud indicators, and how do I then stay below that particular radar and make things happen. And I suspect that in the Steinhoff conversation, when we eventually get told the whole story, you'll find that the auditors will come out and say, look, we looked at these particular transactions, but unfortunately, the people that committed the fraud were aware of what we were going to look at, because it's usually the same thing. So the fraud was committed in an area or within a series of transactions that we ordinarily wouldn't look at. And that remains a fundamental limitation of particularly the auditing profession. So I think if we understand that the ecosystem itself requires particular interrogation, only then will we be able to go forward. So I think the recommendations that one would sort of leave for this tribunal is firstly the question of accessibility to information. So for a lot of people, when they hear about, private sector corruption or fraud, it is usually framed in terms that are very difficult for the ordinary person to really have an understanding of what does it mean and how does it impact on me as an individual. So for example, again, in the Steinhoff case, a lot of people weren't even aware that Steinhoff was an entity. But a lot of people actually know somebody who works at PEB or JET or some other entity that is owned by Steinhoff. But in that particular inability to link the two, you might say, I wonder what Steinhoff is, and dismiss it as something that doesn't matter to you. Meanwhile, you are sitting right next to a person who is actually going to be affected in the long run or even in the short run by this thing that we are now calling an accounting irregularity. So I think what is missing in the South African context is the ability to cascade these very complex conversations, these very binary conversations, in a way that enables the occasional man on the street to have a very clear or an instinctive understanding of what this might mean and how it might impact me in the long run. So that if you are ever going to rally civil society against economic crimes in one form or another, there is a general awareness out there of saying that the next time we hear the terms accounting irregularity, what does it mean? How could it possibly affect me as an individual? And then people will be able to react in that to that particular conversation. And I think until we're in a position to sort of be able to achieve that, we'll find that we are creating or we're cultivating this environment for private sector corruption to simply keep reiterating itself in different forms and in different magnitudes, simply because the people that should be able to really rally around it either don't have access to the information, or when the information is available, they don't know how to unpack it. Now, naturally, it is not going to be the private sector itself that volunteers that type of process that sort of enables people to be able to pick this up, because for them, the one thing that they'll say is that it is not our responsibility to educate people about these things, simply because we personally do not commit the crimes. So no entity is going to come up to you and say, look, I think I might commit a crime in the future, so let me tell people how to pick it up. So the private sector is not going to be the one that actually makes this information accessible and available and easy to digest for the public. And that is essentially the role of the politicians and perhaps the citizens at large to say, we've seen incidences of this rolling out. The past 12 months have been particularly bleak in the South African context. But even now, when you speak to some people and you ask them about the KPMG saga or the Gupta saga, you get the impression that that understanding is not at the level that it should be for them to be able to say, aha, now I get it. Now I can see how it impacts me, and this is why I'm going to march against it. So I think for me, that is probably the more important outcome that we could get out of here. Simply a process of either creating some some advocacy platform or some awareness platforms that enables a greater majority of the audience and the citizens at large to understand how corruption manifests itself in the private sector, and also be able to sort of see the links between the private sector and public sector corruption. And one last thing that I think I need to highlight is that in most cases, even when you do talk about public sector corruption in the South African context hardly ever happens between two public sector entities. Because in most instances, public sector entities, for example, the ESCOM and the Department of Water Affairs, whatever the case might be, if they're part of the same government, they're likely to be able to say, look, we're simply exchanging, transferring goods and services in our capacity as state entities. So the loopholes that tend to exist is when state entities lack capacity to do what they need to do. And this opens up the floodgates for people like me, who call themselves consultants, for people like McKinsey, and for people like the forensic auditors to say, we are going to come in and assist. And it is when you've opened up these floodgates to all these various players, where of course the potential and the possibility of people either creaming off by charging more than they should exist. The possibility of people essentially doing a really substandard job on the understanding that next day you're going to call them again. So once we deal with the state's inability to create its own capacity, unfortunately, we're going to be stuck with this particular problem. And the great irony, of course, is that a couple of years ago, the Auditor General tried to do a research exercise on finding out just how reliant is the public sector on external consultants. None of them could provide the number. And of course, the only way to get the number to find out just how reliant the state is on the private sector and consultants is to hire another consultant.
Thank you, Mr. Sithole.
Would this be a convenient time to have lunch?
Yes, Chair, we have no more questions from our side, so it will just be questions for the panel.
Well, we will ask our questions when we return.
Okay.
Thank you.
Sure. That was it. How long is that?
Are we all sitting?
No, I don't know what you're going to ask him. Do you have any questions?
You tell me when, huh?
Lunch hour. I feel it'll be a disservice. I'd just like your opinion on what you think about the states using taxpayers' money after the effect to rescue these fallen SOEs.
Thank you. And yeah, I survived lunch. I think the issue of using taxpayer funds to sort of rescue the state-owned enterprises is actually part of the trap that taxpayers find themselves in, because the complicated reality is that the state-owned enterprises do not exist primarily for a profit motive. In instances where they can make a profit, they're encouraged to do so. But since they don't exist for a profit motive, they primarily exist for a social need more than anything else. And unfortunately, what tends to happen is that those individuals who are in a position to sort of bring such corporations down to their knees are fully aware that the state itself is not in a position to let the entities collapse. So I think the one example that we had was obviously the social grants issue, in the instance where the Constitutional Court was very clear that the contract itself was illegal. But of course, the impact of cancelling that contract on the basis of its illegality had far-reaching social implications, which would have really led to a lot of people being disadvantaged through no fault of their own. So essentially, that was one example where we had to concede on the fact that in instances where state-owned enterprises are that particularly important, we're going to have to bite the bullet as taxpayers. We've seen another example, probably in the case of ESCOM, where in as much as we might hate to admit it, we'll always bail them out, regardless of how they obviously simply manipulate their processes. So the key issue here is, could we then, as taxpayers, find a way to then recover those funds from the enablers and the facilitators of the corrupt activities? And if we would be in a position to do that, then you might find that the impact on society and the taxpayer is somehow mitigated by the fact that we're able to recover from the people that lead us to bleeding that amount of cash. But yeah, it's one of those that even if we don't like it, it is very impractical to imagine that we would ever withhold taxpayer funds from entities of that nature. But also, quite importantly, we do have to draw a distinction between entities, state entities that are fundamentally important and some that are not so important. So in the extreme case, you would compare the social grants agency to South African Airways. Now, South African Airways is a type of entity who you should start questioning, should we be bailing it out using taxpayer funds? Because it is an entity that operates in a competitive space. It provides a product that is not fundamental to the needs and existence of the society at large. But the government is of the opinion that it is of strategic importance. So we should be able to hold them to account to say, if you're saying that this is of strategic importance, you should be able to find a way to run it sustainably and profitably. And if you're not in a position to do so, then we as taxpayers are not comfortable with bailing it out. So I think we can distinguish between the ones where we have the taxpayer trap, where we are always going to bail it out, whatever the circumstances are, And when that happens, we should be able to have some recourse against the people that led to that situation, and then also distinguish the types of state entities whose bailouts we should always oppose simply because they're not fundamental to the existence of our democracy. Thank you.
Thank you.
Thank you. Thank you very much. May I add that really it doesn't facilitate a social purpose. Its objective has now become to facilitate, as far as is possible, the criminal purpose of corruption. But be that as it may, had you been asked questions before lunch?
No, I had not.
It may have been saying that it was very worth your while to wait until after lunch. Because if you had been asked questions before lunch, there would have been many questions. And having thought about your evidence during lunch, I think it was expertly given. It was very, very useful. It educated us all a great deal. And speaking for myself, I don't have enough expertise in this matter to ask you any meaningful questions. That I realized at lunchtime today. I would have otherwise done so. So thank you very much for your help, and you may stand down. And let us move to state capture.